Hello, everyone, and welcome back to TradeFinder Live. My name is Zach. Most of you out there might be familiar with me by now, but if you join us for the first time tonight, welcome. It's great to have you on board with us. We need to go over some important housekeeping details about the session, and then we will get to the good stuff, aka Mr. Rob Roy. So first and foremost is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it now if you like, but that's the main point to take away. Now, again, most of us out there are likely familiar with the Q&A process. Once we open it up to questions with the time remaining, please keep in mind the Q&A portion is always limited for this session. We always have so many good questions, but never enough time to answer them all, again, with the limited 1 hour session we have. So please know if we don't get to your question, it has nothing to do with the validity, and take that as encouragement to attend the Insiders meeting on Thursdays, where you get 45 minutes of Q&A with Rob and Jeff Beamer. So very high likelihood of getting your question addressed there. All right, well, my personal curiosity is that interest rates seem to jump up again, yet the market performed a little bit better than one would think. I don't know if that means the correlation's over. I'm looking forward to hearing Rob's thoughts on that. And at this moment in time, I'll go ahead and introduce the man we're all waiting for, Mr. Rob Roy.
Thanks, Zach. I heard your voice cracking. Are you going through puberty or what's going on?
Yeah, I'm a late bloomer. No, I am a bit under the weather. I got a dental procedure going on, and it's got me feeling a bit iffy. But
it's
pushing along. Wouldn't miss this.
No fun with the teeth, as everybody can see from the background. I am still in the mountains, and it's been absolutely beautiful. But a little change last night, as my grandmother would say. It's cold in them there hills. It got pretty cold last night, and we're feeling the effects of fall up here, but the positive is it's beautiful with all the leaves changing, etc. Market was kind of cool today, but as Zach mentioned in the beginning, rates jumped up today, and you would have thought possibly that the market was going to perform much worse than it did. All in all, we actually performed pretty well. So taking a look at the chart here, you can see that we opened above that level that we've been trading for quite some time, the 50-day moving average, 5 straight trading days there, where the high hit the 50-day moving average. We opened above it. So it begged the question, are we going to give that 440 level a run? And then the second question is, did we fill that gap? So the low on that gap bar was 438.43. The high today, 438.14. So again, not technically filling the gap. That's getting awfully close. And I say it usually closest doesn't cut it. Usually it actually gets filled, but certainly you have to wonder if that's close enough. But when we take a look at that 440 level on the SPY, that still remains the bar. The 50-day moving average, it was nice to see it trade above that, but we couldn't hold it, close below it. But kind of a break-even day, considering the fact that the market had to deal with those interest rates. We sold off hard at the beginning of the trading day, then rallied big, and then kind of no harm, no foul at the end. It was interesting. So we had retail sales that came in a bit hotter than expected. People talking about the U.S. consumer just refuses to stop spending. You have to wonder how long can it do that with the amount of debt that's being shown on credit cards. But the numbers show that we're still spending. And we had another Fed governor that came out and said, things are looking pretty good. The job market is cooling off as kind of their last bastion of information that they want to see. They've admitted that other areas of the economy were showing some softening, but the job market had been the problem. And at least this Fed governor said that that was showing some signs of softening as well. So I think that's what created this back and forth today. The rate jump was a concern that sent the market down. Then some positive commentary sent things back up. So we had the rate jump on the retail sales, and then the Fed commentary And then at the end of the day, nobody really knew what to do. And we still closed between the 10 and 50-day moving average, even though we traded above the 50-day. We didn't trade below the 10, just right down to it. But here we are. So really nothing different than where we were last week. Unfortunately, as far as whether or not we break above 440, if we just test it and turn and head lower, we still have a rather well-formed qualified 5-wave pattern to the upside. It's about as good as it sets up. Nothing's 100%. That doesn't mean anything. That it's a well-formed pattern. Well-formed patterns sometimes don't work, but this one's set up well. And I do think if we get above 440, we do have a chance to do that rally up to the wave 5 potential high. But we got to break above 440 first. That's the first order of business. And until that happens, I think it's a little premature to talk about hitting that wave 5 high because we could easily just come up to 440, roll over and head lower and disqualify this pattern. Anything is possible. And I'm sure you saw the negative news coming out of the Israel-Palestinian conflict, and the head of the Palestine canceled his meeting with President Biden. So that's always got to be a wild card back there. And I know a lot of people commented on YouTube on the last U.S. market update that war is good for the markets. As weird as it sounds, historically, markets have gone up during times of war because it's good for industry, replenishing supplies, etc. And it seems counterintuitive and almost unfortunate, but historically, the markets have performed well in times of war. Now, we're not at war yet, but we are friends with Israel, and if called upon, I'm sure that we would be providing assistance to them. But anyway, it's, you got all the talking heads of different countries and saber rattling. You never know when one of these things could just explode into something even bigger than what it is already. So that's a concern that always has to be in the back of your mind, I think. So that's what we look like as far as the market. Again, really not much different than where we were last week. Now, if we take a look at the TNX, there's that jump in rates that I was talking about. So a big move higher in the 10-year, and we're getting awfully close to taking out that high from the 6th of October, which would move that wave 3 over. And that makes you wonder, are we just going to make a beeline up to that wave 5? For those of you that are new and are watching this for the first time, first of all, welcome to everyone to TradeFinder. But when you have a wave 3, for whatever reason, the Elliott Wave algorithm, and these are not my labels, which sometimes people make comments that I don't agree with your labels. They're not my labels. These are from the Elliott Wave algorithm. This software is called Profit Source. You can find out more information about it from hub.com, hubb.com. I think it's the best Elliott Wave software that exists. And one of the primary reasons is it's programmed exactly to the algorithm as Ralph Nelson Elliott wrote it. So if you're a believer in Elliott Wave, don't say I don't agree with your labeling. Say you don't agree with Elliott's labeling, because that's what's reflected here. All I'm doing is trying to go through and analyze the charts the best way I see them, and pass that information on from somebody that's been trading Elliott Wave since 2001. So I do have a little bit of history behind it, but again, I'm reading the charts and seeing them as anyone else would. I'm not personally labeling them. I've yet to meet the person that could personally label Elliott Wave charts with continued success doing it. So what happens here is, for whatever reason, the algorithm likes this 53 level, so call it 5.3 on the 10-year, which is a little scary. And then this wave 4 here is a projection. It doesn't mean that it's forecasting that the wave 4 has begun. What it's saying is, if the wave 4 were to begin today, that's where you could expect to find some support on the corrective move before a continued bounce. But when you're in a wave 3, because this area is of interest to the algorithm, sometimes the wave 3 takes you right to that level. Then you have the wave 4, and the two tap boxes, time and price projection boxes, change based on where that wave 3 goes. So it's possible that we stay in the wave 3 all the way to 5.3%, which would mean a future level higher than that. And again, that's kind of scary to think about. It did look last week like with this move lower, perhaps we might be looking at creating the wave 4, but that seems to be kind of side with today's move. And we'll see how tomorrow plays out. But if we take out that wave 3 high, then the fact that the wave 4 could be starting now goes by the wayside, and things look a little bit dicey from that point forward. And then taking a look at the dollar, at least that's calmed a little bit. That's been helpful, especially with the spike up in rates today. At least we didn't have a corresponding spike in the dollar, but it is still in a wave 3 to the upside, which is troublesome from an economic standpoint. Companies that have international exposure, which so many do now, with the exchange rates, et cetera, having to be factored in, and it does affect earnings. And we are about to get into earnings season in a very big way. And back with us tonight, as promised, is Mr. Jeff Beamer. He was with us last week and was talking to you about a system that he has developed that works fantastically well around earnings. He said he would come back this week, and he has, and we're happy to have him back. So at this time, I will introduce Jeff Beamer. Take it away, Jeff. Thanks
Hey,
for coming
Rob.
back.
Good evening.
Good evening.
I
I
am.
hope it's warmer where you are.
Well, we happened to dip down in the 40s last night. 40s Fahrenheit, and then which is cool for us at this time of year, and in the 60s today. So beautiful weather for us, and it just makes trading. I open up the house and let the fresh air come through and just trade all day, and it's just a wonderful thing. So.
It does sound nice. As somebody that was born and raised in Florida and still has residence in Florida, as everybody knows, the number of days we can open up the windows is about something you could count on one hand throughout an entire year. The heat and humidity don't do well for that. Anyway, I'll stop talking and let you.
Well, last week we talked about our new service, the Delta-Neutral Breakout service, and I wanted to update you guys. I gave a trade out last week. I'd like to kind of visit that trade and give you an update on it. But I also wanted to show you one of our latest trades that we closed out of in the service. So I'm going to share my screen for just a moment, if I can. And let me just grab this. And you should now see my screen. Is that correct, Rob?
Yes, sir.
Okay, great. So we're looking here at trade ID 810. This is progressive PGR, and we did a long strangle on this trade. And you can see that, we had a winner. This was the very last trade that we closed out of, which was last Friday. Okay, so since I came to you last week, we were in this trade. The service broadcast the trade, send an SMS and an email message, and we sat through earnings and we got a nice little pop. So what I'd like to do is show you that trade in some software modeling or option modeling software. And what you're looking at here is essentially the day before earnings. Okay, so we had this strangle on where we bought the October 145 call and bought the October 140 strike put. We've been in the trade by now for about 2 days. And here is our original risk in the trade. It was $476. Okay. And it showed on, 3 days into the trade, it showed that we had a little bit of a loss. That little bit of loss really came from the fact that time decay was working against us. Okay, so we were, there's a couple of ways that these trades make money. One way is ahead of the earnings, implied volatility rises. Okay, and we could possibly profit enough to take that trade off, or we wait for a breakout either up or down after the earnings event. and that will actually offset any loss in time decay. Now, in this case, what I want you to look at here is this number, Vega, $15.99. If I scroll down this page below here, what you're going to see are lines that represent implied volatility, and you see the red line here, how it's spiking up. Well, that is the 7 to 30 day options, and that's where we are trading within that section of options. Okay, so you can see implied volatility was starting to get pumped up in advance of earnings, but it just didn't offset the theta decay in the trade. So that's why we showed a little bit of loss. Well, let me just advance this one day. So Progressive had earnings before market open, which is labeled as BMO, before market open. And what do you know? Boom, this stock gapped up and raced higher all day. All right. So we took a nice little profit off. We doubled our money, made over a 100% return literally in 4 days. Okay. And took this trade off. Now, I get asked sometimes, what if I miss the alert, or, what happens if I didn't get the exit alert? What happens? Well, there's one of two things that can happen. Either the stock could have reversed and you would have lost some profits, or, if you didn't get out till the next day, you might even make more money. And take a look at this. On Monday, the stock followed through, had even a higher close, and now we're looking at 150% return. And then yesterday or today, okay, we get another move higher. Okay, now we officially closed out of this trade Friday afternoon. Okay, so we got our triple digit winner and did very nice. But if you just happen to have the wherewithal to stick with this trade and ride it out, you'd be looking really good right now. And this is what we see sometimes with these trades, is you get that breakout and you get a lot of follow through with it. All right, so now let me update you on Blackstone, which is the trade that I gave you last week. All right, now same kind of thing is happening here. This trade is consolidating. The stock is consolidating. And that is right where our risk lives, okay? So yes, we show that we're down a little bit in the trade, all right? So if you haven't placed this trade yet, well, if you think it's something where, the stock will move after earnings, which we kind of anticipate that it will, you still have time to get in, because earnings aren't until, let me just verify, here on BX, I believe it's Thursday morning. Let's see here. Thursday morning. Yes, Thursday morning. We have earnings here. Now, what has happened is same kind of thing here. You can see that theta decay is growing faster than Vega is growing. And so what's happening is those two are competing with each other. And right now, time decay is winning. But what we're looking for is the stock to either break up or break down out of this consolidation, and for us to take some profits. Now, will it be triple digits? You never know. I mean, I'd be happy with double digits, honestly. If it makes even 15% would be nice. 15% in a week is, hey, I'll take 15% in a week and a half, right? But I just wanted to bring you this little update that, yeah, we're still sitting in this trade. There's actually still an opportunity to get in if you think the stock is going to move or break out, just like many of these other stocks have. So now we're getting into earnings season. All right. And so what I wanted to do was show you essentially the offer page. We stuck a little bit of video. I did a little video the other day. They have it posted on the website now that summarizes this program for you. Okay. The website, if you see the link up here, it's evotrader.com/DNB, okay, -launch-special. All right. And we just kind of summarize the statistics. The average trade return that we've experienced since we launched earlier this year is 76%. So the average trade return is 76%. Our winning trade percentage has actually gone up. We're about 78% right now, 78% winners. And the return on portfolio, this was through the end of September, and we've had several winners so far this month. But at the end of September, it was 102% return just this year, 102% return on portfolio. All right, this is just like every other service. You get alerts via SMS, so text messages right to your phone, also your email. But here's where we are related to earnings, okay? This week, the week of October 16th, all right, we only have 335 companies declaring earnings this week, all right? But next week, the week of October 23rd, we get cranked up with earnings season. So timing right now is perfect for this. We are going to be busy. If you like to be busy with your option trades and have lots of opportunities and lots of things going on, this is the perfect service for you. We have over 1,000 companies next week, over 1,500 the following week. First week in November, over 1,700 companies declare earnings. Before we start on the downside, middle of November, we have about 800. But if you kind of total all that up in those 7 weeks, that is over 5,000 companies declare earnings. And the amount of opportunity that exists with our strategy is incredible. So one more thing here is, in addition to the discounted membership, the normal membership is going to be $189 per month, but during the launch special, we're knocking $60 off. It'll be $129 a month, and you'll be locked into that price. We've already had somebody write in that took that PGR trade last week. They already made several months of their subscription back. All right. But one thing we're going to do as a bonus, we're going to throw in is the mastery class on our Delta-Neutral Breakout service. Okay. This will be a straddle and strangle class, essentially focusing on all the nuances. Now, believe it or not, this is one of the most basic option strategies out there. I mean, it's really the first one that you learn when you start learning options: buy, call, buy, put. But there are some nuances that come with this, and this is what we focus on in this class. All right. We talk about timing, when to take profits, when to stay in the trade, etc. All those nuances are covered. These class dates are set. Okay. It'll be right in the middle of earnings season. It'll be Monday, October 30th, and it'll be Wednesday, November 1st. So, one is Monday, one is Wednesday. Okay. Right in the middle of earnings season. These will be recorded so that you can review them at any time. And you will also get a workbook along with the course. Okay. All my slide deck, so you can take notes and have the summary pages right in the palm of your hand. All right. So just wanted to come with you for just, to you and update you on that Blackstone trade and talk about the service a little bit. We're having great success. But again, if we go back and take a look here at the Blackstone trade, we're just kind of hanging in there waiting for earnings at this point, which comes day after tomorrow. So Rob, exciting stuff. I'm really excited about the program, and we're getting into the exciting part of the fall.
Absolutely. And I think when you say performance has been great, that's an understatement. It's pretty phenomenal, honestly. And the classes being right in the heart of earnings season couldn't be better timing. So hope everybody takes advantage of this. One trade pays for about half the year of subscriptions, and that's just one. And you heard Jeff say there's 5,000 companies. Now there's going to be 5,000 trades, but there's going to be a lot of trades with that many companies. And it's important to note, I think, that even though it is a basic strategy, a straddle, and it's built around earnings, a lot of people have not done well just trying to put straddles on around earnings. There's more to it than that. That's what Jeff brings, is his system that identifies stocks that have a a propensity to break out on earnings, and
Yep.
and his indicators are showing that they're getting ready to do it this time. You just can't go throw a straddle on any stock that's coming into earnings and expect to achieve these kind of results. It's a system, and that's what you want to learn, and that's why you want to take advantage of this opportunity. Because
And just, not all stocks move. Right now I'm kind of focused on banking, and I did just the opposite on some of the banks. Goldman Sachs, for example, didn't think it would move very much. I put a different type of strategy on Goldman, and sure enough, it moved a couple of bucks. The implied volatility collapsed. We made a nice little profit on that. So, that's kind of the opposite side of the trade. We're looking for those stocks that have the tendency to break out and really move, as you're saying. So, yeah, exciting time. And throwing in the class, that class is a $600 value. And that's what I would normally charge for, 2 days of class with recordings and a workbook. That's a legit price. We're going to throw that in there for free. So hope you guys can join us. But Rob, thanks for letting me jump in here this evening and saying a few words. Hope to see you guys in class, and we'll talk to you later.
sounds great, and thanks, Jeff. And one thing that I would like to add in there is in the class, and you talking about your system. Not everybody gives away this stuff. You talked last week about how some of the guys that work for you at the hedge fund were like, "Why are you telling people what you're doing?" And as people may or may not know, at ewotrader.com, we have a time strategy that's AI based, and the programmers that created the AI system give us the signals, but they don't give us the intellectual property.
Right.
And I'm not going to, and you're going to share with people, what you're doing. So this is a big deal. So I hope everybody takes advantage of it. But thanks for coming on, Jeff. Appreciate it.
You bet, Rob.
We'll talk to you soon.
Okay. Take care. Bye-bye.
You too. All right, so I will go ahead and grab the screen back. Again, hope everybody takes advantage of that. Correlations work until they don't. And right now, there is a great correlation between the stocks he's finding and earnings. So make yourself some money. Coming back here, so that was the chart of the dollar. I did want to show you the VIX. Because the VIX almost looks like it's trying to form a triangle here. We are in between support and resistance, support being down here around 13, the 13, 14 area, and then the resistance being up here around 19, 20, somewhere in that range. So that's where we are. And you can see we're dead in the middle of it, and we're kind of forming. We would have to have a couple quiet days to complete this triangle. We may or may not. But it does look like something's trying to form here with lower highs and higher lows in the VIX, and that could be quite interesting, especially when we are consolidating right in the middle of all that congestion going back from April and May. So if we continue, if we have a couple quiet days here, perhaps into the end of the week, and set ourselves up for a breakout of volatility next week. That really coincides with Jeff's system as well. So you're right in the heart of earnings season with potential breakout and volatility. Talk about stocks that are getting ready to move. That would be a bunch of them. So I wanted to show you Bitcoin, and there was some comments on the YouTube recording, and one of the comments was talking about how I'm just inherently bullish on Bitcoin and I can't get off of it and all this kind of stuff. And I don't think that's the fact at all. I'm just reading the charts as I see them. And the way I see it, until we break below 25,000, you have to be bullish on Bitcoin, or you're not paying attention to what the charts are showing you. If we break below 25,000, then yeah, it's look out below, Katie bar the door time. Down here around 20,000 is probably the next stop, and that would happen in a big hurry. So someone was saying that the whole halving thing's my Achilles heel, and all this stuff. But I'm just reading the chart as I see it, and we did have a big update yesterday on Bitcoin. So we're back above 28,000 at the time of this webinar. We'll see if we can break above 29,000, because we do have some resistance here that you can clearly see. It was support back in July and August, so it's resistance now. If we break back above that, then we really have just kind of this bit of congestion here around 30,000 before perhaps we take off again. I do have some crypto. Actually don't have any Bitcoin itself. So yeah, it's not like I'm trying to preach my portfolio or anything, because as I said, I don't actually have any Bitcoin. So that's the way things work when you put stuff out there on the internet. You're just trying to help people, and if you have an opposing view, let's keep it respectful. I really like that. I mean, that's why we do this, and that's why we like having comments on the videos, is we create a conversation. And if everybody viewed a stock or a chart the same way, there would be no market. We have to have buyers and sellers for every single position, every single stock. And to place a trade, you have to have a buyer and a seller. So opposing views are what makes the market. And so I'm always welcome opposing views to anything that we put out there. I don't claim to be right all the time. I'm wrong a lot. But I do like good, healthy, educated conversations, and that's what we're trying to promote. So let's just keep it respectful back and forth. And, the markets are going to do what they're going to do, and some will win and some will lose. That's how it works. That's how the markets work. All right. So there's Bitcoin. Let's see if they can break above 29,000, and then we may be off and running again if that is the case. And I'm sure someone will ask about Coinbase. So I'll just go ahead and show that now. Then we'll show the rest of our markets, and we'll move into, we only have two what would be considered open case considerations from prior trade finders. And then I do have something to share with you as far as a case study consideration for tonight. You can see Coinbase hanging above that 70 level. Didn't get much of a pop off the back of the Bitcoin move, which I kind of thought it might. I thought if Bitcoin takes off, then it'll probably drag Coinbase with it. I still believe that's the case, but it didn't really get any kind of movement out of that move from yesterday. So we'll see if it's just lagging a bit. There is a little resistance right here at 80. So we're in a pretty tight trading range here on Coinbase between 70 and 80. But a break above 80, and we could have something going, because you see this move that came from 110 back down was pretty quick. So there's not a lot of resistance in the way. If we can break it back above 80 on Coinbase, then we could be off and running again. So I just thought I would tie that in while we were talking about Bitcoin. Looking at the diamonds, we're back up to level that really matters at 340 here. So right there, it's a support resistance area. We have another little bit of resistance if we do move higher at 345 on the DIA. If we can get above those two, then perhaps we can get a little bit of a move higher, possibly up to that wave 5. But we got to get above 345 first. So similar situation to the SPY, but maybe not quite as good looking of a chart, but not too bad. And we did get a 73% correction here, where we only had 50%, 52% on the SPY. So we moved down a little bit further. So we've got to work through, got some work to do here. And you can see that we hit the 50-day moving average on the high, traded a little bit above it on the open, and then closed right back at that support area. Looking at the Qs, you would think that with the move in rates today, that it would be a rough day on the Qs. Really not so bad. Would have thought that would have been a bit worse. And you can see that we have a 5-wave pattern to the downside on the Qs. A really good question was asked on the YouTube US market update. What happens when you have the scenario that we're in now, where we have a qualified 5-wave impulse pattern to the upside on the SPY, but we have a 5-wave pattern that's qualified to the downside on the Qs? Can they both play out? Well, yeah, they could. You wouldn't think that would happen with the fact that the Qs have been a bastion of leadership going all the way back to, beginning of the year. right in January, the Qs kind of took the reins and were the leader. So could we have the SPY move up and hit its wave 5 target to the upside, while the Qs move down and hit its wave 5 target to the downside? The answer is yes, that could happen. Is it likely? Probably not. So what's more likely, I think, is that one of those two patterns is right and the other one will relabel and they'll match up. But that doesn't have to happen. They could both play out. That's occurred many times in the past. But as I said, it's not likely that happens, but it is possible. So at this point, we kind of got to see, all right, which one's right, which one's going to be the leader, or which one's the one that's going to follow through and relabel. So we take a look at the IWM. So again, love all the conversation on YouTube. Please keep the comments coming. We post one every weekend. So looking here at the IWM, we have held 170 yet again, and trying to bounce up. Haven't made it back to the 50-day moving average, which is at 180 here. So you kind of just have to watch the IWM, I think, until we break either above 180, then you can be bullish, or below 170, and then you can be bearish. But this trading range in here harpens back to March, April, and May, where for 3 months we stayed between 170 and 180. So that's an area where we could form another consolidation period. But you break above 180, I think you have to start looking long here, because that'd be above the 50-day moving average on the IWM. But you break below 170, and yikes, Zach, that's more of a Katie bar the door than Bitcoin. Yeah, that's a legit one, as we've looked at that chart before. So I did want to update just a couple of the international markets, and you can see that we did have a bit of a bounce here in the Aussie market, at least based on the EWA. We look at the XJO on Thursday nights in our insiders meeting for subscribers at evotrader.com. And so that's for subscribers only, the Thursday night webinar. And you can see that where we had supported 22, we're kind of forming a triangle here, which is really interesting, I think, on the EWA. So it does look like something's getting ready to happen here. And when you see that, you want to take a look quickly at the ADX, and the ADX is very low. So that is telling you that we have been consolidating for a while. And when the ADX gets that low, and my number, by the way, is when the ADX moves below 13, it's telling you that it's more than likely ready to break out in the not too distant future. So I do think we're going to see some sort of a move here out of the EWA. Now, we've got a wave 5 down here at 82%. It could go down to 100% with a 50% wave 4 correction, or that could be the end of it. And as we've talked about so many times here, when you have a triangle, Elliott himself said a triangle trumps everything. Don't get caught trying to pick a direction. You saw Jeff talks about straddles and strangles with his breakout system around earnings. Same thing here with the triangles. You don't pick a direction regardless of what the Elliott Wave pattern may be showing you. Triangles can break either way. So you want to put on a position that can be beneficial on a break either direction, or you simply wait for the breakout and then trade that move directionally. So either way, but you don't get caught picking a direction when you have a triangle that's as well formed as that one is. Let's see what the Canadian market looks like. And you can see that we're here around this level at 32. We held that, but we have resistance here at 34. So kind of the same type of scenarios with the IWM. We need to break above or below one of these levels before you really have a good feel, I think, on a directional move. We do not have a 5-wave pattern labeled here currently on the EWC. You break above 34, I think you can look long. You break below 32, you can start to look short. But here in the middle, I think you need the market to give you an idea of where it's going to go from here. So kind of a wait and see type of a movement there on the EWC. Looking at India, which is held in there so well, as we've talked about and we featured numerous times. The key here remains the same. 44 is the level you want to watch on the INDA. Some of you may prefer the Nifty, but we used to show that, and more people said they wanted to see the INDA, our friends from India. So that's what we show. Right now, I think you want to let this move play out and see if the INDA can get back above 45. If it can, then perhaps we're looking at extending this wave 5. So if we move above 45, wave 5 probably moves over. We make new highs and continue on, but we have to break above 45 first. So I think you can still stay long the INDA, but if we break below 44, that would be your stop, and you would get out. You wouldn't want to hang around and wait and see anything move, or wait to see what would happen if we move below 44. Yes, we could hold at this wave 4 low, but that's the only thing that would be supportive on a break below 44. And with this big, huge, long run we had coming out of the bottom of March, who knows how far down we could go if we broke below 44. So I think you just kind of keep an eye on the INDA, let it tell you which direction we're going to go. Again, above 45 long, below 44, I think you want to be a bit weary. All right, so the case studies that would be considered to still be open, if you follow along with these, we do this each and every week where we look for case study considerations. We didn't give one last week because Jeff gave that trade on Blackstone for their earnings that are coming up on Thursday. So one more day available there to get in that before the earnings, before the market opens on Thursday. So we had Qualcomm here that we looked at on the 26th, and we had already had a move up in CAMT, which was on the same day. Qualcomm hadn't quite moved yet, but it trying today. You can see we had a nice update today on Qualcomm. So I think you stay in there with this one. Pretty much the same thing we said last week. As long as it stays above 110, I think you stay long Qualcomm. See if it can catch some follow through to this. If it can get up above this 115 area, then Qualcomm could run and we could really take off. So anything above 110, you stay bullish. And if we can break above 115, then maybe we have something really working there. So I think you keep a hold of that one. And then we looked at open text as a bearish trade. And this was back on the 3rd of October when we were trading just above 34. And you can see that's exactly where we are now. So we had a little bit of a bounce up, but it did hold at the resistance area where it needed to hold to stay in this one. And it did bounce back down. So perhaps this one continues lower from here. So, so far, so good. So those two that would be considered open, if you've been following along, I think those stay in that open category. All right, Zach, before I turn it over to you for questions, there was someone that asked on YouTube on the market update if I would look at UNG tonight. So I said I would. We like it when our viewers on YouTube also attend these trade finders, and it's a great community that we have both on YouTube and here on TradeFinder. So we had a move to the upside here, and we used to look at UNG a lot, and it just got aggravating because it just couldn't get above 8. And every time we get up towards 750, it turned around. We tried the 8 level here back on the 4th of August, and that didn't work. And then we got up here again for 4 or 5 days, touching 8 on the highs, couldn't break it, and then moved back down. Now we're starting to get into the time here where you think, okay, this is an area where perhaps we could maybe catch a bid here as we start to look at wintertime. And of course, the more severe the winter, the greater the need for natural gas, etc. The exciting thing about the chart of UNG is if we could break above that 8 level, we could really have a run in natural gas, or at least in the symbol UNG, the ETF, ETV as it's called, because that move from 18 down to 8 was so vertical to the downside, there's literally, other than a little bit of resistance here, right there at the 9 level, and it's not great, but there's a little bit. Other than that, there's nothing in the way of another big run in UNG, but it's got to get above 8, and so far it's not been able to do that. So here we are back down at 7 again, and we talked about this before, that if you had a really long-term horizon and you were looking for something that could do well, and you weren't looking for a trade but more of a position longer term, I think there's a great chance that you see higher prices in UNG over the next 6 to 9 months. Now, it's not a specific pattern, which is what we normally do. That's just more of a intuitive viewpoint, and probably not a good enough reason to place a trade. Just, what seems to make sense to me. But there's just tremendous support there around that 7 area. Every time it tries to break below it, it comes back up. But every time it tries to break above 8, it comes back down. So we're still just playing around with these 7 and 8 levels here on UNG. But again, it was asked on YouTube if I'd show that tonight. So I thought I would. And I can't imagine this doesn't get asked. So I hope I'm not stealing all your thunder, Zach. But we had looked at Tesla before and with earnings tomorrow, and talk about a stock that looks poised to break on its earnings report. You have this really nice triangle here formed in Tesla. And I think we could have a breakout move here and see some sort of a significant move. Once again, we look at the ADX and it's a very low level here. So the case study consideration for tonight is going to be BP. So I'm not going to go through the process of showing you the chart and all that kind of stuff, or the search and everything, due to the fact that I do want to allow a few minutes for Q&A. Now, the thing to be concerned with here, or to consider, is that we've had a nice run. It's got earnings coming up. I believe it's on Halloween, I think, is the earnings report, the 31st, but it's coming up here fairly soon. Now, we are just a touch overbought away from the 10-day moving average here, and we have this level here around 41 that could act as resistance. So if it bounces a little sideways here, don't let that throw you. Then we could come back down towards 40, let the 10-day moving average catch up. Any of those things could play out. But this looks really strong and ready to make a run through earnings. You can see how the DMI is setting up. And then as a bonus, there's one. Now, the issue here on this, and I'll just tell you, MPLX, is the spreads are 30-cent wide. So we're at a price of 36.31. There's a target price you can see up around 37. And so that's, call it a 65-cent move. And so even if you look for in the money options with just this 70-cent move, when you have a spread that's that wide, if the market makers are playing games with you on the fills, and it costs you 20 cents to get into the trade on slippage, and then another 20 cents to get back out, that's 40 cents of your 70-cent move. So my point here is, this one looks really good, and I think we should keep an eye on it, but it's challenging to trade because of the width of the spread. And you have to consider not just getting in, but getting out. And that would take a big chunk, over half of your profit, even if this target gets hit. Now, when it becomes interesting is if it moves past the 61.8 or the 100% extension. Let me show it to you here. If it moves past that and looks to move higher up there to 161.8, because you can see right there, 37 is 100% extension on the zigzag. If it looks to move past that, then we have a different story. but we can't count on extended C waves. We can only make our trading plan based on what's supposed to happen. And what's supposed to happen is it runs to the 100% extension, and that's just 65-cent move from here. So that one's a bit challenging, but I think it'll be fun to watch to see if it continues to move higher. So I'm going to make a note of those. And with that, Zach, let's open it up and take a few questions here while we can.
That sounds great. Yeah, thank you for another phenomenal presentation there, Rob. I would be doing a disservice to our subscriber base that is actively watching if I did not lead with PLTR. We've had lots and lots of chatter about that in the chat box.
Okay. Good old Palantir. When's their earnings report? It is on the 2nd of November. And if we take a look at the Elliott Wave chart, we completed the 5. We came back down to the previous 4. So all that occurred as planned. And I think that corrective move looks like it might have been a little too far for a zigzag, but let's measure it. Nope, it's not. It's actually good. So this is pretty interesting. So we're right at the 100% extension. We hit it, we backed off. And as you know, if you've been watching, the rules on these zigzags are once you hit the expected target to go to an extended target. So that's the next one. Remember, the 100% was expected. We were to 61.8% correction. So 100% extension, it did that. So it satisfied the zigzag. And then if you're going to have an extended C wave, usually you test the previous fib level, which it did. And so now we're back up at the 100% extension. So the only question in my mind, I think there's a great chance that it does go to that 161.8% extension. And it just so happens that that lies right at the previous wave 5 high, which that's nice and convenient. So it'd just be a test of the previous high in addition to the extended C wave. The question is, does that occur before earnings, or does the earnings report become the driver that moves it there? So that one's really interesting. So good way to start, Zach, and everyone that's watching that one. I think you can kind of dip your toes into that one. Not the greatest DMI pattern, but a really solid zigzag nonetheless. So yeah, really interesting.
Agreed. Yep. That was a great question. Again, with a lot of context around it. For the sake of time, I'm just going to fire off some symbols at you if that's all right.
Yeah, let's just do it.
All right, so let's go to GLD.
Good. The metals are interesting again. And, we talked about this before, was angry that been watching this for so long. And then we get these big gap ups, which is not unusual to gap on the GLD, but the vertical moves are frustrating. When you've been watching it, was kind of wanting to see it break this 175 level, which has been support. That's going to be resistance. And this is what I was lamenting, I believe, Thursday night during our insiders, is the fact that we had this big, huge gap up above 175. So it didn't really give you a chance to get in on a break of 175 before it ran all the way up there. But it's doing what it should do after a big volatile move like that, consolidating a bit. And so I think at this point in time, we just try to be a little patient here. Now we risk the exact same thing occurring because if it breaks above 180, then I think we're off and running on GLD. And we've been waiting for a bit in the metals for, gosh, if you've been watching, it seems like over a year, maybe even longer. And so we might be there. And so if we break above this 180 level, then perhaps gold is ready to run again. And I know it just said that, it'd be good to wait. That didn't serve us very well on the 175 with a big gap up above it. We're still just a bit overbought. We still haven't quite consolidated all of that gap up move from the 10-day moving average. So I would give it a little more time. And then if you wanted to be very aggressive, you could step in then, even if we haven't broken 180 yet. As you know, I like to give an aggressive and a more conservative view on a lot of these. So the more conservative view is certainly letting GLD break above 180. An aggressive one would be as soon as that 10-day moving average catches up, regardless of where we are, entering then. But yeah, for the first time in a very long time, the metals are very interesting. So next one, Zach.
Let's have some fun and go back to AMD.
AMD, yeah, it's gosh, it's interesting the way the cycle things are. Do you remember the time when it was every week someone was asking about AMD every single week?
NVIDIA and Tesla, yeah.
Yeah. So we're right here at this level of potential support at 100. So hasn't been a nice move. NVIDIA had a rough day today, and that was on the back of some restrictions of the chips in China. So that's what sent NVIDIA down today. If you're wondering why did NVIDIA have such a bad day? So that's a temporary news thing. It's just reactionary to the news. But I think there's no surprise there. And I think it's going to recover that. So I think you just have to have a little patience on NVIDIA. But AMD is not performing anywhere near as well as NVIDIA has, and we need to hold 100. If we break below 100, then I think you have to look at least 90 as the next stop, and possibly worse than that. However, if we can hold above that 100 level, trying to bring up the earnings to see if that could be a driver there on the 30th of October, the earnings report, maybe that could provide a bounce higher. So we got down near 100 on the low today. And we're able to close back at the 50-day moving average. So yeah, the key there is 100 on AMD. Couple more.
Perfect. Yep. Sorry, the mute button wasn't working for me there. David says, "Hi, Rob. Hope you're doing well. Could you please look at TLT? It's in an area of support that held into 2002 to 04 and 06 to 07 periods."
Yeah, so it's interesting that when you ask about TLT, I showed the TNX so much. On the 20-year, I usually trade the inverse of this, which is the TBT, but TLT, same thing, just prices versus rates, and it is at an area of support here. The problem here, I feel, is if I go back and look at TNX, that chart just looks like it wants to go higher. So can rates go higher on the 10-year and not on the 20? And if rates go higher, then that would suggest prices go down. Prices and yields move in inverse proportion. So I'm a little leery of this one because the chart on the TNX looks so strong. You can see we're kind of in no man's land here. You talked about when it held, but I'm a little more nervous on this one. I would be looking for an opportunity really to go short here on the TLT rather than some sort of a bounce. Now, as far as the market in general, I would love to see TLT bounce because that means rates are coming down, and that's going to be positive for the market, specifically tech stocks. But that one's a bit iffy there for me. And I know this is kind of a ways away and a pretty conservative call, but I would want to see TLT get back above like 92 before it would even become interesting to me. The 50-day moving average is there just above 90. So even a bounce to that is only testing the 50-day moving average. So I'm a little leery on that one.
Very well. I see we're at time. You got time for a couple more symbols, perhaps?
Yeah, we'll do two more, and then we'll call it a night.
Very well. Let's check out Adobe.
That's a good one. Pops in from time to time, and really expensive stock, all the way up at 560, and of course they're in the whole big AI game, etc. And we came up to the previous wave 3, broke it just enough to get a wave 5 labeled, but couldn't really stay there very long. So the key is, can we break above 560 with follow through? So we're right there. We got a little bit overbought, and I mentioned a lot that when you break a major point of resistance, break out of a triangle, moving averages, whatever, you have to have a follow through day. And so we didn't even have one day. It traded above it, but it didn't close above it. It closed right back to 560. But we were a bit overbought. And the other side of that is that you don't really want to break resistance when you're already in an overbought condition, because it tends not to hold. And that's what occurred here. So we're back now to the 10-day moving average. This looks solid to me, but I still would want to see a break above that 560 level with a follow-through day, and then I think there's a great chance we're coming up here to this wave 5 target. It looks solid to me. Just got a little bit overbought and having a little bit of pullback. All right.
Well,
last one for the night.
Last one for the night. And again, please remember, if we didn't get to your question tonight, it has nothing to do with the validity. We never get through all the questions. We have tons and tons of great questions in each of these sessions. So please take that as encouragement to attend the insiders meeting, where you'll have a much higher likelihood of getting your question addressed there. So lastly, to wrap up the season, wrap up the session rather, let's go with Meta.
Oh, yeah, there we go. Good one. And pretty nice day today on Meta. If y'all are watching, and you just have to be impressed. Now we bring out the earnings. It's not showing up there. So let me give you the earnings date on Meta. So it's 10:25 after the market. So 10:25 after the market closes. So we have it'll be next Wednesday. So we won't even get to look at that in next week's TradeFinder. I mean, one more day, we'll look at it on the insiders the following night. But we're holding, just climbing above that 10-day moving average, as I mentioned, I believe last week. The concern here, I mean, it looks like a great pattern. Seems like we want to go up and hit that wave 5 target, which is at 390. And if we go to 390, we're really not going to hit 400. But is the earnings report going to be the driver to do that? And there's so much goodwill priced into this stock with this climb to the upside here. Really nice move higher. This kind of stuff here looks like accumulation. So there's a lot of institutional ownership here. They're not going to bail very easily, but it's just, they're going to have to nail earnings to propel it higher, and maybe they do. But for right now, before next week, we're kind of testing that wave 3 high, and we ran up to it. We backed off, but we held the 10-day moving average, and now we're about to give it another run there around 330. So if it breaks above that, it likely trades higher. So if we were to break 330 tomorrow, I think we probably trade higher into earnings. And then see what the earnings report says. But that area could act as resistance all the way up till earnings for the entire week as well. So I think to go long right now, you got to see it break above 330. And then safer move is to see what happens on earnings. But of course, a stock like Meta can really move on earnings, especially if they do come out and have a solid earnings report. I think there probably will be some short interest going into this earnings because of that big, huge run. Some people will be taking a shot to the downside here. Now, they may be wrong, but I just feel like, you're coming into another earnings report that the stock is pretty much priced for perfection in earnings report. And if they disappoint at all, you could get a pretty decent pullback. So I think some people will take a shot at that. And if they're wrong, then they'll have to cover. And there's your catalyst for the move up towards 390. So that's going to be really interesting to watch. I wish we'd have the answer next week, but we will for the insiders. So with that, Zach, thanks as always. Great job. And thanks everybody for spending your time with us. You know my view. Time's the most valuable asset we all have. We very much appreciate it, and very sincere about that. When you spend your valuable time with us, and we do our best to make it an educational, informative use of your time. Thanks so much. Have a great rest of your week. Look forward to talking again soon. Take care, everybody.